morning, everybody. How are you all doing? Sorry, I had a bit of a technical problem. Haven't used a computer for a week, so well, the streaming anyway. How are we all doing? Morning, Danny. Morning, Evil. Morning, Joe. Morning, Leon. How are we all doing this morning? Back at last. So, yeah, been away for a week. Well, not been away for a week. I just haven't been streaming for a week. So, today, going to have a quick look at what's happened over the last week. Have a look at the news, obviously what's coming up this week, because it's kind of Monday stream, but on a Wednesday. Yeah, going to put into plan today a position trading strategy for dealing with the Trump administration. So just want to look at really the last few weeks worth of activity, look at how the market's moved, and look at what I'm going to do position trading wise for the short term, because I don't think at the moment the best way to position trade is using RSI specifically, just because I think we've got a lot of indicators at the moment, pretty much all indicators at the moment, which are all over the place because of this volatility that we've got. It's very, very random, the movement in the market at the moment. So what I'm going to look at is entering manually with the position trader E8, still scaling in the same way, doing the same thing, but just making sure that we pick the instruments to trade a little bit more carefully, so that we don't get over leveraged, and look at basically how to get in on these moves, because we've got a lot of trends happening at the moment. So mean reversion in a trend is more difficult, but taking pullback entries in line with trend is probably the easiest way to make money at the moment. So just taking breakouts on these big moves. However, we'll look at the market, obviously, and we'll see how things have been moving. But everything is all over the place at the moment, which makes all strategies very, very difficult. It's more about money management at the moment than strategy. Strategy goes out the window. Technicals are out the window. Fundamentals are out the window. The market is moving erratically whenever it wants to. So you have to basically just take opportunities, cross your fingers and hope at the moment. It's a horrible position to be in at the minute, but it is what it is. There's nothing we can do about it. So we'll start off as we normally do with the news. Let's just see if there's been a break this morning. 5-minute ORB is about to go in. Where's my pen? Really, really organized this morning. What's it doing down there? There we go. So 5-minute range is in. No trade at the moment on the DAX or the FTSE on that range. I've readjusted my ORB back to 0.2. So 20% of ADR as the range, back to the standard edge, basically. I'm still using ADR 3 at the minute, because I still think we need to be on top of the current volatility that we've got. And I'm using a slightly wider stop at 0.15. So I've gone back to this mainly because at the moment, personally, I would rather take less trades and not trade than try and squeeze money out of this market. So I'm just going back to the normal edge of 20% of ADR as a minimum range to take. And as you can see, it's not necessarily going to hit that as often. I didn't have a trade on the NASDAQ yesterday. So I'd rather basicly sit on my hands at the minute than try and trade this. I did a withdrawal on the account this week because I needed to. But yeah, just at the moment, I'd rather just be super cautious. So, but ADR 3 is still what I'm using. So if we look at the indices with the DAX, wow, that's a gap. I didn't notice the gap there. Blimey. Wow, that's a big gap up. But yeah, if we look at the DAX, so if we just go back in time and look at normal price action on the DAX, yeah. So the thing that you'll notice, which is very different, is the tiny little gaps that we get. You know, big strong move, big strong move, big strong move, tiny little gap, rotation, no gap, just a rotational day, nice big move there, tiny little gap. Yeah, that's normal DAX that we're used to trading. What we're seeing at the moment is this. Yeah, every single day there is some kind of gap forming. We've got obviously the big parabolic days, but look at the price action at the moment and how restrictive this price action is. Yeah, this market is in absolute shock at the minute. Huge gap up today. I mean, these sorts of scenarios, you can't say that the gap's going to fill, because yes, gaps do normally fill, but they don't normally gap that much on a Tuesday to a Wednesday. So this thing's all over the place at the minute. So I think the best thing to do is just sit around and wait for big movement. And if there's big movement, expect big continuation or big reversal on big movement. But if it's not doing much, I don't want to get interested in it at the moment. So I'm looking at the last 3 days worth of price action. I'm taking the average ranges of the last 3 days of price action. And I'm saying if we can do 20% of that range, let's see if we can try and get 1 to 1, 2 to 1. That's it. Just try and grab a little bit out of the market if we can. I think that's really all you can do at the moment with this. I mean, there's a nice break going on at the moment on the DAX, but I'm not on it with ORB. If I'd have left it at 15, probably would be in that now, short. But yeah, very, very difficult situation to trade at the minute. So we're going to look at that in a bit more detail when we look at position trading strategy. So just quickly looking at the news to start off with. Morning, whoever I haven't said good morning to. Leon, can't remember. Don, Ace, Chris, how we doing? So news this week. Obviously, we've had the bank holiday Friday. We had the bank holiday Monday. Yesterday was no news day. We had ECB. We had Lagarde speaking, but that was pretty much it for yesterday. Today is PMI day. So it all kicks off today in literally 5 minutes. So we've got PMIs coming in a minute. All day PMIs basically. So we have the Eurozone, French, German, and then the combined. Then we get the pound at 9:30. We got Waller speaking 5 minutes after market open. It's a bit of a weird one. Then we've got 15 minutes after market open. We've got the US PMIs coming out, new home sales, and then we've got Bailey speaking later on. That might be an interesting one because Bailey's been very, very quiet about monetary policy. With what's going on with Trump. So I think this is the first time I've seen him scheduled to speak about anything since Trump started the tariffs. So that might move the pound a bit later. Tomorrow we've got unemployment claims. It's a bank holiday, Aussie and New Zealand going into Friday. We've got retail sales for the pound on Friday and obviously for the Canadian as well. We've also got Schlegel speaking for the SNB on Friday as well. That could well be a big mover because obviously the interest rates are down at 0.25% now for the Swiss. And we're expecting that interest rate to potentially hit 0. So if there is any indication on Friday of him coming out and saying, yep, looks like we're going to go down to another drop, down to 0, then we're going to see a lot of weakness coming into the Swiss franc. However, at the moment, the Swiss franc is being pumped to death on Trump's tariffs because everybody's flocking to safe havens. Gold through the roof, Swiss through the roof, yen, same thing. Yeah, so even though we may well get negative comments about the Swiss franc, yes, it should be negative, but all it's going to take is one Trumpism to drive it completely opposite way. So, you know, this is what I was saying earlier at the beginning of the stream. Fundamentals at the moment mean absolutely nothing. Yes, they're important, and yes, they will have a gauge on future direction of price, but right now it's all about trade wars. So the Purchasing Managers Index at the moment, whatever this number is, because of the tariffs, we know damn well it's going up next month. Yeah, so this month's figures, i.e. last month's figures, is what we're looking at right now. We're looking at what the figures were for March, April. We know April, May's figures are going to be higher because minimum everything's gone up by 10%. Yep, so PMIs are going up, which typically you would find is bullish for a currency. So whether or not this market will decide to move bullish on these numbers, because let's face it, we all know they're going up. It's factored in. It's got to be factored in. Whether they actually go up on the news now, we don't know. So it's going to be an interesting one to watch. We'll watch the Euro US when that number comes out, and we'll see what impact that has today. So that's the news this week. We'll see what happens with the PMIs. It's going to be very hit and miss. It's either going to move or it's not. Yesterday, God, it's literally every day is just blood red news everywhere. Something is happening. No plans to dismiss Powell. That's not what you said last week. You changed your mind. Never intended to dismiss Powell. The first thing you did when you came in was said, if Powell doesn't play ball, I'm going to kick him out. Didn't say it directly, but you certainly instigated, you sort of intimidated. No, that's not it. Hinted at is the word. I can't remember what the word is. Morning, Mark. Hinted at what you were going to do. But we had all that stuff last week with Powell about, you've got to drop the interest rates, Trump was saying, and Powell's not interested in dropping interest rates the way that Trump wants them dropped because it's just intimidated. That's it. It's just going to hurt. It's just going to hurt, isn't it, basically? Yeah, it's just utter madness still. I've been told by a person close to Bessett reports on his remarks about the trade deal with China having been imminent overstate what he said. He meant that there is room for talks and de-escalation. Yeah. So yesterday we had a load of de-escalation talk, basically, to do with the tariffs. So what we saw yesterday was some US dollar strength coming in, basically, on that news. Day before that, we had the opposite. So again, moved up, moved down, which is why intraday trading is really the place to be at the moment, because all the market is doing this erratically intraday, but we are not going anywhere on anything, are we? So it's difficult to say what that was. Probably get undone today, but we'll wait and see. Let's just quickly see what that news was or is. Hasn't come out yet. Let's quickly look at M5 and we'll see if we get any move. No idea what these figures will be because obviously there's stockpiles at the moment. The other thing you've got to remember with statistical figures, businesses don't suddenly have costs going up overnight on these tariffs. They're going to have stock. So it's going to be a slow knock-on effect with these PMIs, but they will start to go up straight away. But it's probably going to accelerate the PMIs because obviously if you're a business and you've bought 3 months worth of stock in, you haven't got to necessarily buy more stock for a couple of months at the increased rate. So therefore those prices may not be passed on immediately. So could be a delayed impact. Zero impact on the PMIs. I imagine they came out as forecast. 48.2, 46.8. So we're 0.1 down on services. And we are up 0.3 or 1 point and 0.3. So very little movement. So nothing much on the French. We'll see if the German is different, but they are pretty stable. So no movement off of that so far this morning. Okay. Let's quickly look at the indices. So I'm short FTSE. So there's the ranges in. Gap downs on both today. So DAX, no trade yet. But looking for breakdown. We have been triggered. Well, I have been triggered on the FTSE. Short. So we'll see if we can get a trade out of that. Again, tiny profit yesterday, just made a couple of hundred yesterday. I'm just going to move the target up on this. Might as well leave that in place on the DAX. Bang in the middle of the gap, isn't it? We haven't triggered on the DAX yet anyway, so might as well just go for that partial. So that's a 2. I think it's a, did I go for 2R? 0.3. So that's a 2-to-1. So on here, I'm looking for a 1-to-1. And that is basically 3-to-1 on the DAX. Try to stop on the DAX. And I've got a looser stop on the FTSE. Again, this is something else I've done with the indices at the moment. So I'm using slightly different stops on the indices at the minute, just to give one an aggressive attempt and one a slightly easier route. Try and just, you know, what I'm not trying to do is quickly get in, stop out on both at the same time. So I'm giving one more breathing room than the other. If they both go the same way, which they often do, same with the US indices, one of them might get stopped out, but if it doesn't, it makes a really good profit. The other one, if it pulls back, it's got more chance of just recouping the cost of that one. Just trying to balance out at the moment because these markets are so erratic. So we'll see where they go, but no movement at the moment. Right, so that's your news. So going back to obviously what's happened over the last week, the trade wars have kind of de-escalated a little in the fact that we've kind of put the brakes on. But what that's done is also put the brakes on the market. The markets over the last week are stuck, really not knowing what to do. So this is the China negotiations will be this slog bilateral trade situation, blah, blah, blah. They were talking about de-escalation. So what's happening is all we're seeing at the moment is the markets just basically, as soon as we get any news, reacting to that news, but really do not go anywhere at all. Yeah, they just die. The fear and greed, we are still in extreme fear. It's gone up a lot. We were down at single digits. So the market is still down here, which means basically we're doing this with most instruments at the moment. Most symbols are just sitting around and reacting on news, but we're not really having any direction. There's no reason to go into a trend in either direction. We're not trending in extreme fear. We're kind of just stuck in extreme fear at the moment. So all the time we're sitting down in these areas, it's going to be erratic. This is higher volatility, higher, stronger movements, and nuts, basically. So that's all we're basically seeing at the minute is involuntary moves in the market. So this is the ECB coming out saying we're going to cut and pause. Again, that's, I think, one of the things. If we look at what happened with the interest rates last week, for, where are we? Canada, euro. So the interest rates last week, obviously we got that cut on the euro. So Lagarde now is saying, and this is what we were anticipating before, pause, drop. That's what we were planning to do. And she's kind of sticking to her guns on that at the moment. So euro, gradual grind down we should be seeing. But apart from that, as I say, it's just like loads of volatility coming in. So we're going to look at ways to deal with that with position trading this morning. And I'm going to get the position trader EA set up on my account, on the position trading account, basically, but without full automation on at the moment. So I'm going to go through what I'm planning to do. And obviously you can obviously do what you want to. Some people have been getting in touch with me who are still using RSI. And obviously, as you can see from things like Euro US dollar at the moment, you are still getting pullbacks, but the pullbacks are more violent, or rather the pushes are more violent and the pullbacks are weaker. So with this type of movement, you tend to be stuck in trades longer. So using RSI, if you're using price action or market reversal triggers, you are only getting in when the bears come into the market. And the same with the moving average, really, but the moving average will tend to trigger later. So the signals themselves are still absolutely fine. Price action, we're getting in with the market when the market wants to move. But the condition indicator, at the moment, I'm not convinced the relative strength index is the right thing to use, because the RSI measures consistent movement. What we're seeing at the moment is more of this. So we'll look at ways you can use the RSI and other indicators to still trigger entries. But rather than just relying on an overbought or oversold condition, what we should be more interested in now is how did it get to the overbought or oversold condition. So that's kind of what I wanted to cover this morning. And I'm basically going to take manual entries, initial manual entries with the buttons. I haven't got the position trader EA on here. Yeah, I'm going to take manual entries with the buttons and let the EA still manage my trades for me. But the entries I'm going to decide to get in, and it's not going to be basically indicator based. It's just going to be kind of intuition, if you like, which is already you've got at the moment. Ace, I use position trader on one account for manual trading. The one thing I'm struggling with is that once I've taken a trade and if it hits TP, how can I stop it from not taking any more trades? So if you don't want it to take any more trades, all you're going to do is you're going to set ADR reversals to false, RSI mean reversion to false, button trade only to true. Yeah. So if you have button trading, actually, no, you want button trading only to false as well, actually. That's the best way to do it. So it depends how you're set up. I don't know how you're set up, but if you have that set to false, ADR reversal strategy and RSI mean reversion strategy set to false, it will not take any more trades. Yeah. So if you were to enter, I'm just going to set this up like this quickly. So if I take a sell now, for example, in this propulsion gap, yeah, it will either go to TP or to whatever my profit target is set in the EA, or the trade's going to go against me and it's going to scale in at whatever I've set it to scale in at. Yeah. When it exits that trade, it won't take any new ones, because the only automated triggers, as it says here, auto strategy entry, the only automated entries, initial entries, first trades, it uses for signals or conditions is RSI and ADR. So if you have both of those set to false, it will not take an initial entry for you. And that's the whole point of having this set up like this, so that you can manual trade, and exactly what I'm going to be doing. So I'm looking at this now going euro US dollar. PMI figures have come out as neutral. They've dropped interest rates. Lagarde said they're going to continue to drop interest rates. We've got a weak US dollar at the moment. So, but we've also got a weak euro at the moment. So I'm not expecting this to skyrocket through the roof. So I might take a propulsion entry short. So hit the sell button or hit a sell stop button and let it get in when we want to. Or I might have taken that market reversal retest there short. And that's it. That's all it will do. So if you have this set to true on this account, when I press the button, it will sell, but this version of the EA will do absolutely nothing. It won't scale in for me. It won't take new entries. It won't do anything. But on my VPS, that version is set to false, which means that that version on the VPS is going to manage that position. So when I take a trade short here on this machine, on the VPS with that set to false, it will scale in, do drawdown control, exit, do all of that stuff. Yeah, but it will not take new trades if you have those set to false. It doesn't matter if it's on your VPS. It doesn't matter what that's set to. If those are set to false, it will not take an initial entry. Don't forget, position trading has got two elements to it. Your initial entry, where you take a trade based on a strategy, whatever it may be, and then the scale-ins, which is the position management. Hopefully that answers that question. Sorry, I don't remember the last trade profit, next risk amount, etc. are from the new version. I don't have them on 3.02. No, you don't. This is the new version, yeah, 3.04. Stopped out on that one. Short. Yeah, so this is the for the new version. This new version, I've been doing some testing with it. I've changed the logic dramatically. So it no longer uses starting balance at all. It does use yesterday's profit and today's profit and last trade's profit to decide what it's going to do with risk. So what I've decided to do is I'm going to explain how the loss recovery mechanism works in a video, and then obviously just release this version as it is. But it's going to give you very different backtest results to the previous version because the recovery logic works very differently. I think it's better and it's more flexible, but it's slightly more manual in the way that it works because you've got more options. So I'm going to do a video on it before I release version 3.04. I was going to put it out as basically something for you guys to test, but I've got to do a video on it. So there's no point. I might as well just put it out there and say, here's version 3.04. This is how it works. If you want it, get it. If you don't, stay with what you got. Doesn't really need any more testing. I've tested it and it all works. But the loss recovery mechanism is great. It works very, very well. But the way that I'm using it, I'm altering as I go based on what I want to do. So sometimes I'm going in and I'm changing the portfolio loss recovery mode to true and false on individual instruments because I want to take slightly more risk on one and slightly less risk on the other. So it's adding another option and another level of confusion, I think, for a lot of people. Not for a lot of, but no one's got it yet, obviously, but it's going to add a lot more confusion. So I really need to explain how it works, why it works, the way it works. So yeah, I'm just going to get that out there, but I just need some more time basically to get the content done. Long on the footsie. Thank you. I'll message you separately in Discord as the message limit here doesn't let me elaborate. Okay. Sounds ominous. I don't know what else I can really answer that question. It's all explained in the manual and the video how it works. If you want it to stop, if you don't want it to take a trade, your options are, if you don't want it to take any more trades, turn off auto trading. If what I've just explained doesn't work for you, it doesn't do it. Yeah. This takes automatic trades. If you're using this for TP and stop loss trading, it's the wrong EA. This is a position trader EA. It's not designed for TP trading. It's designed to take profit on positions. Once that position is closed, it will not take any more trades. You can come in and change these settings. And so let's say, for example, you say, I want to get in automatically on ADR, but when it's done that, I don't want it to get in again. You come in and you set that to false, and then it won't do it next time. You're going to have to manually intervene. I think I know what you want to do, but there isn't a way to do it, I don't think. It does what it does. So if it doesn't do what it does and you don't understand from the manual, it won't do it because the manual is as clear as day. So if it doesn't do it, it doesn't do it. If you're trying to do something complicated with it, it's going to have to be some kind of manual intervention. But message me anyway. It might be a short answer though, as in, no, it doesn't do that. Anyway, message me. I'll answer it. Right. So position trading. So what I am going to be doing is, oh, by the way, just before I do that, the new ADR indicator came out yesterday. So if you're using the ADR indicator, go and get it. It's the new version and it's got all of this up here. So a load of people were asking me for this. I had it on a development version and people wanted it. So I've just been dragging my heels doing it basically because I had to do it properly rather than my bodged version. So the new ADR indicator now has your ADR 10, 3, or whatever you're using. It also shows you what half of an ADR is and what quarter of an ADR is, so that you can quickly see and do calculations based on what's half an ADR, what's quarter of an ADR. So that's now there automatically. And also in the indicator now, you can adjust the size of the lines. So you can make the lines thicker to make it easier to see. So that's the only changes really. Yeah. So that's out now. If you want to go and just download the updated version, I might have to have that on 3. You can also change this font size as well. So if you want it bigger, might actually do that bigger. So you can see obviously easier what the ADR numbers are. So ADR at the moment, obviously, I've over the last few days, I've been looking at how I'm going to trade during this Trump presidency, because it's very, very different to what we've had before. So the trade war we had last time he was in was very small, very protracted. It was just not what we've got this time. What we've got at the moment is parabolic movement followed by shock. Yeah, the worst conditions for position trading are flags. Yeah, so what we're looking for when we position trade is a push and a pullback, a push and a pullback market structure. Yeah, so we're looking for the market to just move orderly. So banks building positions, taking profits, building positions, taking profits, building positions, taking profits, reversing position. Yeah, that's what we're looking for as position traders. The worst type of position trade you can take is something that goes parabolic and then flags. It goes parabolic and then flags. Yeah, because there's not enough downward movement in the mean reversion to take profit. Yeah, and this is where we make our money, on the bank's profit take moves, because you cannot predict future explosive movements. So therefore, when the explosive movements happen, we can react to those movements. That's what position trading and mean reversion is all about, identifying extended conditions and then making money on the retracements of those. Your trend traders are entering after those retracements. They lose because they become V-shaped and A-shaped recoveries, etc., etc. So you can't predict the future at the end of the day. But as position traders, any kind of movement that goes like that is bad. Yeah. This is what we have. This is what Trump has done. What this market movement or this condition is basically shock and awe. It's basically the market having something completely unexpected dropped on it, having to completely readjust its portfolio positions, big movements, and then sitting around going, right, we survived that. What do we do next? Think about it. While you're thinking about it, another bomb is dropped. Quick, change the portfolio into a new position. Okay, well, it looks like it might go this way, but don't put too much risk onto it in case. It either then explodes or it explodes. And it doesn't matter which way it explodes. It's the way that it's moving, which is what causes the problems. So this is typically what a squeeze is. A squeeze is a strong move without a big enough pullback to escape, followed by a strong move without a big enough pullback to escape, etc., etc. Typically, they will last somewhere up to 2 to 3 months in a really bad squeeze, and then the market will completely undo, or 50% at least retrace on it. We know this. This is what it does all the time. However, at the moment, because we are getting these parabolic squeezes going in, this is the type of price action that we're experiencing, and you can't really do much with it from a position trading perspective. So using any indicator that measures movement as a condition is not going to be much use, because all that's going to happen is it's going to give you a condition reading and then reset itself without pulling back. CCI, MACD, RSI, stochastics, they're all going to do the same thing because they're measuring price movement and they mimic price movement. So you're not going to find anything really indicator based that is going to be that reliable at the moment. So the best way, I think, to trade in this kind of market is support resistance based. So looking at hourly timeframes and looking at levels basically to either jump on with the direction if we're assuming nothing is going to change, or to try and mean revert. But any kind of mean reversion at the moment is something you want to kind of get out as fast as possible on, because it's one move in the opposite direction, you may not be able to get out of it. So short-term time frames are much easier to trade at the moment, because when these big moves happen, you can make an awful lot of money on them very, very quickly. Yeah. So the problem is anything that doesn't use a stop loss at the moment is potentially going to get into very big trouble. So it's more important than ever to look at correlation between instruments and just use uncorrelated instruments to make sure that whatever you're getting into, you're not over leveraging on. So it's difficult to position trade because position trading relies on the kind of shotgun approach of a mass entry into multiple instruments and then just waiting. Yeah, we just use time as our main trading tool and just sit out the drawdown. Yeah. However, this move here, if this is the start of the collapse of the dollar, it's not going to come back. Yeah. If you look at where we've been in the past, why won't we be up here? And why won't we get there like that? Yeah. The dollar can strengthen that much. We know that. The dollar can weaken that much. We have never seen, but with what's going on at the moment, why won't it? Yeah. So trying to jump in on the opposite direction of this, to me, is just super, super, super high risk at the moment. So trading support resistance propulsion moves is kind of, I think, the best way forward. So I wouldn't want small time frames with stop losses. Brilliant. Yeah, explosive moves, make loads of money on the ones that work and you just hold them. Very good. But for position trading, I wouldn't look at any time frame lower than H1, H4. And with these time frames, I don't think using multi-time frame analysis is really any use at the minute. So what I have decided to do is just use a single time frame, H1 or H4, and just take entries based on price action that I see on these time frames. So rather than jumping down, so let's say, for example, we're in this propulsion gap now, jumping down onto M5 and waiting for a reversal alert, I'm just going to wait for confirmed price action on the time frame that I'm on and hit the button. Yeah. So get in with a price action pattern that you think looks good. It could be a market reversal alert. It could be a retest of a reversal alert. It could be a buyout of a propulsion gap. It could be a resistance bounce, anything. Doesn't really matter too much, does it? Because it's either going to work or it's not going to work. But sticking on the hourly and the 4 hourly time frames is going to make sure you're slowing yourself down, which is what we usually do anyway. Slowing yourself down so that if the market is going to push for weeks on end, you're not sitting here on M5 shorting this and then looking at this small movement as the next thing to get in on. Yeah, we need to be looking at the bigger picture. Yeah, if I'm going to get in short here and it doesn't work, I want my next entry up here somewhere. So what I'm doing is looking at adjusting, and you could use the zone trader EA to do this, or the position trader EA, doesn't really matter. I'm using the position trader EA just for simplicity's sake, really, because I like to press buttons rather than the zone trader where I've got to draw a box. It's just easier to press a button when I see the price action, and it's all discretionary anyway. So hitting the sell button here on this trade right now, and then adjusting the EA that is running on the VPS to scale me in somewhere up here, right? So, and this is the important difference between normal automated strategy, which works on indicators and mathematics, if you like, to get you in and out, and manual kind of position trading, going back to kind of the way I used to do it. Entering here on this particular chart on Euro US dollar, I would be saying, right, I'm going to short this now, and I'm going to assume that we're going to come down and retest these propulsion gaps, which means it's going to give me roughly 225% of the 10-day ADR. If that doesn't work out, I want to scale in this case, additional entries, 1.1, 1.15 max multiplier. Do not want to get aggressive at the moment. Distance between trades at the moment for this particular trade is going to be, so that is half an ADR, 3/4, 1 ADR, right? So I would change this now to 1 ADR. Okay, so I do not want to be getting in half an ADR to 3/4 of an ADR apart, just because. Yeah, in normal market structure, when we get a push and we scale into a push, for example, into 3 positions, we expect somewhere between a 38 to a 50% retracement, a shallow to a deep pullback on that move before a new leg starts. If a new leg is going to start, if it's not, that's fine, brilliant. But that's what normal market structure does. It pulls back a third to a half to maybe 3/4 before it starts to its next leg up. At the moment, I don't want to just scale in and assume that that is going to be the norm moving forward. What I want to do is I want to get in, and I want to get in again at a logical area. So again, this is where the zone trader EA can help, because you can say, I'm going to take an entry here. So what you could do is, if you're using the zone trader EA, is you basically just would go, right, I'm going to just draw the square here, and it's just going to trade for me. It's going to take the first entry when the candlestick closes outside of the zone. Yeah, and then you would draw your second zone here. Yeah, but with the position trader EA, I can do that equally as well, but I would rather use 3-bar reversal price action or a reversal alert at the moment. Yeah, so I'm not using moving averages. I don't want to use a moving average at the moment. I want to use confirmed price action. So I want a reversal alert at high or low of day to kick in up here, or I want a 3-bar reversal on this time frame to show me that, yeah, the bears are in control. So that's basically what I'm looking to do, is just go, right, I like the look of that short now. I'm going to take it, and I'm going to set this instrument up to be scaling in 3/4 of an ADR apart. So and I might actually do this one now. Let me just quickly check what the 1/4% over an ADR is fine. Okay, so can't do that on this account because it's a tiny little account I'm on. This is not the position trading account, so it's just taken a 0.01. But anyway, so that demonstrates the point. So there's my next entry. Look, next short up here. So that's roughly where I want to take my next short. Now I can adjust that level, so I can say, right, when I've taken a trade, that's my next scaling. If I don't want my next scaling to be that far apart, I can change it and go, okay, that's too far away. I'll change it to 0.5, and then obviously it jumps down to there. Okay, so that's too close. I don't want it there. So it's just a case of, I think at the moment, the best thing to do is adjust where you scale in manually. And obviously you can do this manually. Yeah, don't forget, the other thing you can use with a position trader EA is the manual buttons. You can just get it trading manually for you. So don't have the scaling set. You can set your scaling to be 5 ADR, for example, right? And that's going to just stick that way up there somewhere. So, yeah, so it's miles away. Don't need to worry about it. Yeah. So if now price pushes down from here, happy days. And I would be protecting things with stop losses, because if it goes parabolic like this because Trump says something, I don't want to be in a position. I want to be out of it. And I'd rather take a small loss on slippage or a break even on it. But if it pushes down to here and I like it, take it. If it doesn't and it goes up to here, I will wait until we get up here. And don't forget, because I'm trading the hourly chart here, I only have to check this every 3, 4 hours. I'm looking for some price action. Have we had a reversal alert? No. Have we had a 3-bar reversal kick in? Yes. If we have, just hit the sell button again. Yeah, because that scaling, that automated scaling is miles away. Don't need to worry about it. Yeah. So I'm kind of going back to the manual trading process of analysis, if you like. So not relying on indicators to get me in automatically, and not relying on indicators for scaling in or any standardized distance for scaling in, because instruments are all so different in the way that they're moving at the moment. Even US dollar pairs, you look at different US dollar pairs like the euro US dollar here, you can see it's very, very sideways. The pound US dollar is grinding up a little bit more. The US dollar against the Canadian dollar coming down a lot harder. US dollar yen, that's actually pretty similar. US dollar Swiss, very similar to the euro US dollar. Yeah, again, which brings me on to correlation. So it's all about just at the moment adapting to what is happening in the market. And there's nothing wrong with position trading, but I don't think you can use ADR in the same way now as we have done in the past, because the average daily range is erratic. It's changing dramatically every day based on what goes on intraday. So you can't use ADR3, because if you get a big strong move like that and a big strong move like that, you're going to get a completely different scaling distance to if you get 3 days in a row that do this. So look at the ADR3 measurement. Yeah, that's ADR3 for the last 3 days. That's ADR3 for the 3 days before. They are not the same. You cannot get into a trade here using the ADR of these 3 days and expect it to be right in any way, shape, or form. You could take into account the last 6 days worth of movement. Yeah, in this case, that's probably a good approximation of what on average we're doing. But then if you go back and look at the 48 hours we had there, and then that was a fairly big day and some small days in there, that reading of ADR6 is going to be completely different to the ADR6 we've got over the last week. You can't use ADR10 over a normal range because we are not doing that. You could use ADR10 over this, but you're taking into account massive swings and tiny, tiny, tiny range-bound days. So ADR at the minute, with the type of market that we're in, is absolutely fractured. It's all over the place. So every instrument, again, is very, very, very different. Yeah, you're getting big sudden moves going in on certain instruments when other ones are sitting there tight as anything and doing absolutely nothing. So I don't think really you can use any indicator with any reliability for anything at the moment, for entries, for exits, for spacing. It's just all over the place, the market. So, and it's been like this since Trump got in, and until something changes with this trade war, I don't think it's going to change. So I think we're just in for a ride of huge, huge movements and then tiny, tiny contractions where we just don't know what we're doing. So in a position, for example, as I am here on Euro US dollar short, if it decides to go into this market state, I'm not going to lose anything, but I'm not going to win anything. If it decides to go into this market state in my direction, I'm taking the cash. If it goes against me, I will wait for it to get to somewhere it's been before, and then I will scale in. Yeah, but I'm not going to scale in based on that ADR or that ADR. I'm going to scale in based on where price has reacted, because that is where we're likely to find at least some help to drive price back down again. Support and resistance is still a thing. It's just you've got to be looking at where we've been doing things recently. Yeah. So if you want to get in long on this right now, that is where the market rebought after this big parabolic move. Try that. But that ADR level, not much use, is it? Because this, if I change the ADR right now, you'll see how different it is. So if I mark on there these ADR levels that we've got, which are those ones there, and at the moment I'm using ADR 10. If I change that to ADR3, yeah, now all of a sudden our ADR levels are here. Yeah. If I change that to an ADR6, our ADR levels actually are pretty much the same as the ADR3, aren't they, on that one, on that particular example. And if we go to something like an ADR30 to try and smooth it out over a longer period of time, again, the ADRs, that's not a bad measurement, is it, ADR30? But that's taking into account all sorts of weird and wonderful contraction and expansion, isn't it? So that's really the average of what it does. In fact, that's probably a better reading to use at the moment, isn't it, ADR30? But anyway, my plan is not to use ADR at all. So there we go. So that's basically the plan. As I say, I don't think ADR scaling is going to help an awful lot, because the difference between what's happened over the last couple of days and what's happened over the last week or so is going to be very, very, very different. If you want to use something, then I would say probably a longer ADR to smooth it out is better. As I just said there, 30 or something is probably a better one to use at the minute. But again, it's very difficult to tell. If we go back to ADR 10. You see, the question is, what's going to happen over the next 2 days? Are we going to be reacting like this, or are we going to be reacting like this? We don't know. So therefore, you are basically taking a gamble of 50-50 on one of those or the other. And you could argue it's the same all the time because you don't know what news is going to do. But we do know when news moves the market, it tends to pull it back, which is not what we're getting at the minute. So yeah, shorting. And then for risk, using the ADR, again, it's kind of an eyeball thing for me, but I would stay on ADR 10 because we've got weeks of this craziness. You've got to pick something to do your risk on. So at the moment, I'm using ADR 10 for risk, but for scaling, not necessarily using any ADR. So ADR 10 is my normal risk calculation, and then entries up there. Targets, again, I've just picked a very difficult one to target at the moment, but targets, again, same thing, support, resistance, propulsion. But at the end of the day, at the minute, it's just banking cash. So banking whatever at the moment. I'm not going to be greedy. It's very difficult to not use indicators at the moment for some kind of confirmation. Right now, that is telling me that we should be getting out of shorts. I'm looking at this going, well, if what happened, what was said yesterday is true, then that is what we should see happening. But again, it changes every day, doesn't it? So that's my plan. So from a correlation perspective, I'm going to use the same pairs that I was using previously for correlation. So basically using pairs which are not correlated to make sure that if we have a massive push on the US dollar, my exposure on the US dollar is limited. The problem is if there's a massive push on the US dollar or a massive pull on the US dollar, it's automatically correlated with Swiss and yen. So those things are going to move at the same time as well. I was toying with the idea yesterday of putting gold into the portfolio, just because obviously at the minute with gold, it is a massive safe haven, and you can see the safe haven run we've got going into gold at the moment. It will always do well when in times of trouble. And, you know, this looks, doesn't it, like it's just playing out normally at the moment. But this movement here is not the norm. That's the normal sort of movement we get on gold. This is 2 times, the volatility is 2-3 times higher than normal. So the squeezes are going to be 2-3 times harsher than normal, which means you've just really got to control risk. So limiting exposure to no more than 2x on any single instrument, US dollar, pound, euro, etc. There is an argument for hedging as well at the moment. So if I've taken that euro US dollar short at the moment, there's a very good argument for looking at a pound US dollar and only looking for long opportunities on it, because if it goes one way or the other based on the US dollar, at least one of those is going to pay you, which helps pay for the other. So hedging currencies. So euro US dollar, I'm short. Let's look for a way to get in long on the pound US dollar. So if this comes down, I'll be looking for a long opportunity. Yeah. So taking inverses, you've just got to be a little bit smart with the money at the moment, and just make sure that you're covering yourself as much as you can. But that's my sort of plan. So I'm going to spend this week, I'm going to go live on this, I think, next week. So I'm going to spend this week getting the EA set up, finalizing my plans basically for the instruments, and then start to get into some positions. But I'm going to be, the way that I used to trade was I used to check my charts 3 times a day. I used to check in the morning, at lunch, and in the evening. Because you're trading hourly charts and 4-hourly charts, you don't need to be watching it and eyeballing it minute by minute. I mean, if I check it now and there's not a lot to do, fine. I'll come back and check it at lunchtime. If we pushed up to there at lunchtime, I will keep an eye on it for the afternoon and take a bearish trade. Yeah. One thing you can do as well, if you do want to use the EA for automated entries while you're not here. So this is a great example, actually. So let's actually find one that's done it so I can explain it better. There we go. So let's use the CAD Swiss as an example. Let's say I'm looking to get in short on this. You can set up the EA to take initial entries. So for me here right now, you can see where the RSI is. So the RSI is up at sort of 68 or something. So I can say, get me in on an RSI extension, and I want you to get me in on the hourly time frame, which is what we're on at the moment. And the RSI high trigger, I'm going to set to be 20. And I'm going to set the RSI low trigger to be 20 as well. Yeah. So when this reversal alert triggers, or a 3-bar reversal triggers short, we're going to be above the 20 RSI, aren't we? Yeah. So as long as this RSI line, when that reversal alert happens or that 3-bar reversal happens on the CAD Swiss, is above 20, it's going to be, yeah, this will automatically get me in short. Yeah. So you don't forget, you can trick the EA into just taking trades for you. Yeah. Without a condition. So all you do is you set the condition to be met. Yeah. So if I set that to 20 as the RSI high trigger, the RSI has to be above 20. It's above 20 now, and it's going to be above 20 when it gets down to there, because the RSI will come down to here. That reversal alert will trigger. So if I want to take that reversal alert short, I just set the RSI to that, and it will trigger me short, either on a 3-bar reversal or a market reversal alert. And again, obviously, just set up the signals to be whatever you want them to be. So I'm using 3-bar reversals, and I'm using market reversal alerts. I'm not going to use moving averages at the moment, because, again, a moving average is a lagging indicator. I'm interested in price action signals only. MAs, RSIs, oscillators, everything that you use that is an indicator at the minute is all over the gaff. Yeah. So what's the best moving average signal to use? No idea. So I'm not using them. Yeah. Anything that's lagging price as badly. I mean, NMA is the worst lagging indicator there is, because you're basically saying, in this case, use a 9MA. So tell me when the market has gone down below what it's done for the last 9 hours. Well, it's probably put in 3 or 4 bear candles in the last 4 or 5 hours. And now it's got down below where it was 9 hours ago. Not interested. I'm interested in if something's pushed, paused, and pulled in. If we've had a reversal alert, market structure has broken to the downside, get me in. If I'm having to wait for a moving average, which could basically, if it's gone parabolic, your moving average is going to catch up ever so slowly like that. Yeah. I'm going to miss it. You're going to miss the tight entry, which is, I think, what you need at the minute. We need to react quickly to this price action. So setting the moving average down there on that one is going to automatically enter a signal on a short for me. So don't forget, you can do all of that as well with a position trader EA. Just use your head, think about, I just want to short it. So if you don't want to short it by selling now or by pressing a sell stop button and having the sell stop trail up and then automatically get in, use a moving an RSI and trick it into just taking trades for you. So yeah, so that's my plan moving forward for the position trading account, and that's really all we can do at the moment. I need to get that back up and running because it's my bigger allocation of money and it's sitting there dormant at the moment, doing nothing. Although ORB is kind of paying for it. So long on the DAX, not particularly good long, is it, this morning? Will be if it breaks. So that's the 30-minute ORB on the DAX this morning, and long on the FTSE. So again, RSI and ADR dashboards, weekly ranges. You know, this is the sort of thing that alerts me to look at it, US dollar Swiss. But I mean, if you look at it in the grand scheme of things, that is the weekly range hit, but it's the weekly range for the last 12 weeks. So not really interested. Again, these sorts of indicators where we're looking at what is the norm for the past 12 weeks. We're not interested in what is normal for the last 12 weeks. What's the normal for the last couple of weeks? That's what you should kind of be looking at. If we hit the weekly range averages that we've done for the last 2 weeks, then I might be interested in a short, but not the last 12. What's the last 3 months got to do with now? What's happened since the trade war started? Nothing. So it's all about fine-tuning indicators if you're going to use indicators to be more sensitive to what is going on short-term, not long-term. And again, monthly ranges. If you want to use the dashboards for the monthly ranges, last month, yeah. So this isn't going to work, obviously, because we've had massive movement already. But you know, look at what's happened over the last month. What was last month like? If we hit the same levels we hit last month, it's worth looking at shorts. Yeah. Obviously, we're towards the end of the month now, so we've already done them. Yeah, I mean, we're going to be way beyond, aren't we? So where's April started? There's April there. Yeah. So, you know, this is last month, right? This is this month. Yeah. So in May, I'm interested in what we did here. If we're going to continue as we are, these ranges are what I'm interested in. If we get to 100% of what we've done in April, in May, that's when I might look to start taking some mean reversion opportunities. But I'm not interested in correlating April with March. They are not the same thing. You may as well be trading a completely different instrument in a completely different year. Not correlated, not related in any way, shape, or form. However, if the trade war doesn't end and it still goes on as it is, if for any reason it escalates in any way, this is going to be the new norm. So we need to be paying attention to what's happened here. And at some point in the future, if we start using recent ranges, what's gone on in the last 3 to 4 weeks, what's gone on last month, if suddenly we go through a month or 3 weeks and we go, hang on a minute, we've not had an alert, that's an indication that we're returning back to normality, in which case then we can reset instruments back to where they used to be. But you've got to adapt now to what's going on now. Yeah. Strategies, everything is different. Risk reward is still risk reward. Risk is still risk. Yeah. If you're going to risk something, risk it over a period of ADR, but use these ADRs, not the ADRs from last month. Not going to work. Last week, I took the MRA dash out from the closet and was trying to take 15-minute MRA scalps. Was thinking to use it again on higher time frame for position trading. Today's video comes at the perfect time. Yeah, in effect, that's what I'm doing. You know, I'm reverting. It's almost like I feel at the moment, you almost like you're going back to caveman times. Yeah. He's a caveman, Trump, right? He's bludgeoning this market, and the market's not used to it. So you have to go back to looking at what is going on right now. If there is a reversal alert, it basically means short term there is movement in that direction. Assume that is going to continue. Yeah. If it doesn't, stop out and flip the other way. Yeah. You almost use the market reversal alert as a, right, if I enter a buy, I enter a stop, and I also enter a pending in the other direction. Because if that doesn't work out, it's likely to just get like completely pummeled in the opposite direction. Not normally a great strategy. Breakout strategies are not normally fantastic strategies. They've got about a 30% strike rate because the market spends most of its time doing this. Yeah. But when it's not doing it, and when you get a breakout that works, it can pay the mortgage. So you've got to kind of go back to a bit of manual analysis in this sort of market, and it's all guesswork. Yeah, but risk is risk. It doesn't matter how you enter, what market you enter, what time frame you enter on. You put an amount of money on the table. If I risk $100 on a trade and the trade goes $150 in my direction, I take the money. Yeah. If I risk $100 on a trade and it goes up and it comes down and stops me out, I'll flip that $100 short and see if I can get that $100 back. Not normally a good strategy, but at the moment, survival and getting some cash in some way, shape or form is a result. And those are the people that are going to survive. So it's kind of, automation is fantastic because what it allows us to do is test historically what works and what doesn't, and automatically trade historical edges. There is no history for this. That's the important thing that people need to understand. Everybody needs to understand that this has not happened before. We can't trade any strategy historically in this market and expect to get anywhere near the same results as we've had before. Average daily range, the indicator that everybody needs to use to measure risk, is not going to work when the market is not doing what historically it's done for the last decade. Yeah, we've had COVID in there. COVID lasted 3 weeks. We are now 4 weeks into Trump's tariffs plus, and it's not showing any signs of stopping. This is COVID 2.0 on steroids at the minute. However, it can have its plug pulled in a second by him turning around and going, sorry, China, back to 10%. And everything goes back to normal. Or does it? Does it go parabolic for 3 weeks to undo everything that it's done? We don't know because we haven't been here before. COVID, we know was a V-shaped recovery or A-shaped recovery, depending on which way it went. Is Trump going to be a V-shaped recovery? I don't know. Never had it before. History teaches us that it should be. But this is not this. This is normal price action on the US dollar Swiss with the markets operating normally. This is not normal. So is this going to do that? Or is this literally going to flag and drop another, whatever this distance is, which you can't measure because it's not something historically we've got a basis for? So, baselines of normal movement, market structure that we typically know is, this is all perfect examples, isn't it? Push 50%, push 38, push 68, retracement, down, pull back 50%, push back 38% retracement, push back 68% retracement, push up, flag, push 38 retracement, bang, 38 retracement, probably 50%. What's this going to do? I can't go back and show you any time that this has ever happened because it's not available. So you cannot trade any strategy right now using anything and expect the normal to happen. When we get above the 90 level, it does not come down. When we get below 15, really, it does not go up. We are down at 4s and 5s, and it's not showing any sign of letting up. Why should it? Yeah. So you can't, this is what I mean by indicators are useless. ADR, don't forget, ADR is a measurement of historical data, average daily range over X. X is not anywhere near what it used to be. It's just completely random at the moment. RSI, what's the relative strength over the last 10 days right now? Way bigger than it's ever been in history. It's useless. Yeah. So all you've got is levels, price action. So right now, what do I want to do with this? I want to short it. When do I short it? Don't know. If it shows me something on the chart that looks good, i.e. we get a lovely big shooting star out of propulsion, followed by another shooting star out of propulsion, I will hit the sell button. But I am selling after that much movement, which every bone in my body says is going to revert. But right now, I go with the flow. And if I'm wrong, you know where it's going. So if I short this after a pullback here and it's wrong, where's it going? V-shaped recovery. So you can plan your position into that V-shaped recovery, but you are not going to use half of an ADR or quarter of an ADR. You're going to measure what that distance is, and you're going to space your trades out accordingly. And if that means that the ADR setting of 149 means if I want 4 positions on that V-shaped recovery, which is 540, I need to be spacing my entries 1 ADR apart, not half, not 3/4, 1. Because it means that when the V-shaped recovery happens, I will have a maximum of 4 positions on that V-shape. And then when we've done the V-shaped recovery, we should expect some kind of retracement, which means it gets me out on it. But that's still going to be painful. That could take a month. It's taken 2 weeks to move twice as far as it's moved in history. How long is it going to take to get back there? I don't know. When's it going to start going back there? I don't know. No one can tell you any of this stuff. There's no one at the moment that is trading fundamentals or technical analysis that is reliant at all on what they know. Yeah, it's just not working, is it? Yeah, PMIs come out dramatically bigger or smaller. So what? Last month has got nothing. The Purchasing Managers Index from last month has got nothing to do with next month's, because next month's is based on what's just happened in the last 2 weeks, and it ain't the same. So this is literally where you are at the minute. You are back to caveman with everybody on the planet sitting there going, I've got this fantastic strategy that no longer works. I've got to do something different. Get in. The advantage you have in position trading is that we can be less accurate. And this is the most inaccurate thing on the planet at the moment. So it's suited for position trading, but it's got to be adjusted to an extent that we just go with the flow. So every instrument has to be treated independently based on what it's done. So assume that that's going to happen if you short it. Yeah. If you're longing it, assume that that is going to happen again. And that's the amount of drawdown you're going to take. So you've literally got to look at what's been happening in the last 2 weeks, take some kind of average rough as to, let's assume that this is going to continue at this sort of range, and plan your trades accordingly. Support and resistance is going to be very hard on a lot of these instruments to find. Yeah. I haven't got any. Yeah, if I'm going long on this, I haven't got any support. You've just got to get in and base your trades accordingly with risk. Yeah, this 2 weeks worth of movement that we've had here, we had a big one there, which was September 2022. We had one huge week, which caused this collapse. We've got 2 huge weeks, followed by a tiny inside bar, followed by an outside bar. For those of you that have watched the price action session in the members area, you know what an inside bar and an outside bar means. Indecision. The market has gone, holy crap, for 2 weeks. What do we do next? No idea. No one can tell you. So you just have to use your assumptions, pick a direction and go with it. But very, very, very difficult. No one, including myself, is going to give any kind of this is what should happen at the moment. And if they are, then a lunacy. It's just nuts. No one can physically sit there and go, this is what should happen next. Trump, what's he going to say next? And if you're a mind reader or you've got a backdoor into Trump's brain that, or you're programming and controlling him like I think Putin is at the moment, you ain't got a clue. Do you think if China and US come with a good deal, everything will come back to normal again? Yeah. I think we will. Normal, I don't know. I do think if the China and US situation sorts itself out, I do think the US will recover the dollar. And potentially the stock market. But will we continue the same? I don't think we will. I think he has screwed the world so hard with what he's done. I don't think the world is going to be the same place from a trade perspective anymore. Think about what happened when the Ukraine war kicked off, yeah? And think about what's happened to oil price. So that's the Ukraine war kicking off there, yeah? Energy prices. What happened when the Ukraine war kicked off was the entire world suddenly realized that everybody was reliant on these pipelines going through Russia and Ukraine. They all suddenly went, what? Oh, crap. Everybody's costs for energy went through the roof. So the world turned around and went, we can't have this anymore. We're going to start buying our energy from Canada, from the US. We're going to put up a load more solar farms. We're going to start trading with other countries to minimize the risk on these pipelines. It all changed. Now, Russia and the Ukraine do not ship anywhere near as much oil through. Saudis having much more coming around on ships rather than through pipelines in the future. The whole world economics changed when we suddenly had the light bulb moment that, crap, if Russia decides to turn off those pipelines, we're all screwed. Same with the US. Around the world, we trade everything in the US dollar. Oil is traded in the US dollar. Gold is traded in the US dollar. All the stock markets and businesses float on the US stock markets traded in the US dollar. It is the world's currency. We buy and sell in the US dollar. He just decided to screw every country on the planet and make all of their costs go up because they're dependent on the US dollar. We're all going, we need to remove our dependency on the US dollar. So yes, it will recover, but is it going to be strong moving forward? No. We get everything from China. Why do we need to use the US dollar? China provides everything to the entire world from a manufacturing perspective. We don't need the US dollar. All the chip manufacturers manufacture their chips in China. The US chip manufacturers manufacture their chips in China. Yes, you can move plants back over to there, but can you still sell us your chips at the same price in the US dollar? No. What do we need to do to the US dollar then to make people buy your chips from the US? Devalue the US dollar. The things change, and this is a new world order that's been kickstarted by a guy that decided he wanted to make America great and make the dollar great again. What he's actually done is remove our dependency on the US dollar by scaring the crap out of us and realizing how dependent we are on it. Same thing that happened with oil. Yeah, the world will shift. Where it shifts to, don't know. We've got the BRICS thing. China, again, why can't they be the dominant currency? Why can't we use the yuan? Why can't we start trading yuan? Yeah, pound yuan, not pound yen. Pound yuan, not pound dollar. Yeah, the dependency between currencies is interdependent on trade and strength of the economies. The US economy is stuffed at the minute. So I don't think there will be, economists, and this is the thing, all economists are forecasters. Yeah, they forecast the future. They try and forecast the future based on historical. So I don't think anybody can really forecast what's going to happen moving forward now. But what we do know is, and this will never change, banks and institutions need to make money. The way they make money is by buying and selling currency, buying and selling stock, buying and selling commodities. As long as there is a market, the market will move up and down as buys are accumulated, and profit takes happen. They will still take profit on moves that they have created. It's just at the moment, there's less of the speculative money-making movement happening and more of the holy crap happening. When the holy crap stops happening, even if we're not dependent on the US dollar and it isn't the main currency, it will still get bought and sold. Yeah, you can trade anything that moves in waves in market structure. Market structure is not going to change. That will still be there. The speed that things move at and the distance things move will adjust. And this is why we use as traders ADR, because ADR is a dynamic measurement of an instrument's individual movement over time. This is your absolute key to making money in the market, because you've got to be using measurements of how the market is currently moving. If for the last 2 weeks it's been going like this, assume it will continue to go like this. If you want to measure over a longer period and that period ties up with the same sort of movement we've had over the last 2 weeks, you know that this is roughly what it's going to do. And if it's going to move up, it's going to move down. If it moves up by 100, it's going to move down by roughly 50 or 38 or 68. That's not going to change. It may be that the US dollar used to be trading at 118 ADR. In the future, it'll be trading at 50 ADR because there'll be half as much interest in trading the dollar because we now buy oil in yuan. That's all that's going to change. This won't change. This won't change. That will still happen. At the moment, this is unreliable, this is unreliable, and this is unreliable because the market is in shock. Yeah, that is not normal. This is normal. So yes, we've had over the last 4 days a return to normality. Why? Because Trump went, okay, for 90 days, I'll give you a rest. So if we start going as normal now, brilliant. But what if he suddenly decides, actually, I want 185% on China tomorrow? We're going back to this. Nothing you can do about it. Yeah, it's very, 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 very hard condition to trade in. But what is normal? Yeah, this is never normal, is it? This is the thing. You can't define normality. You can measure normality, which is what ADR is. It's a measurement of normal. And your tweak on normal is the number. Yeah, if you say this is normal, use that 1, 2, 3, 4, 5, 6, 7. Use an ADR 7 because ADR 8, 9, and 10 gives you that. ADR 7 gives you that. That's the difference. Is at the moment, how do you measure normality? And normality has to be measured over time. What's been normally happening in the market? What on average does X do? That's what you use. But which do you use? ADR 3, ADR 5, ADR 6, ADR 10. Impossible to tell, isn't it? But if you pick something, stick with it until it goes nuts. And if it goes nuts, change it. Yeah, same as I've done with this. Yeah, I've switched over to an ADR 3 because at the moment, I want to know what's going on over the last few days because it seems to be pumping like crazy and then it dumps and it contracts. So today I'm going to assume we're contracted. Oh, it's gone parabolic again. Right, let's incorporate yesterday's parabolic move with the last 4 days worth of movement. Give us a rough over all of this. It's all rough. Everything is rough, isn't it? Because we don't know what is going to happen today. Every day is unique. Every day is the future. DAX long break, nice and clean. FTSE reversal. So there was a stop out on the FTSE, break long. So again, you know, it's right now. I'm going to close that out. That pays for that. Done. See if we can get that up to there. Again, adapting. Just want money banked at the minute to pay the bill. As I said, I've withdrawn from this account because you need to. You just got to grab the money where it is at the minute. But diversification is key. The breakout strategy has been hammered over the last couple of days as well. You know, the new one that I've been working on, because we've had contracted ranges. It's suddenly gone to super contraction. Admittedly, I'm trading it on a fairly small account. I was trading it on a very big account, which I've drawn, and that's made a loss. It's all changed again. Yeah. So again, this adapting to what is going on in the market on a day-by-day basis is really all you can do. But the beauty of position trading, and which is why I want to get the account set back up on that, is I haven't got to rely on that at the moment for income, but I do need to get back into it because I don't want to stagnate on the strategy basically and move away from it, because it's done so well for the last 5 years, but it's been hammered over the last 6 months because this market's just killed it. So got to get back into it. So it's a case of just going back to the roots basically. It's nice every now and again to have a reset. You have to every now and again have a reset and just go, right, what did we used to do when it was nuts? And I've only got what I used to do when I was nuts, and that was just basically get in and wait. So back to the good old time when your trademark name was Order Block Breaker Trader. I've never been called Order Block Breaker Trader, no. Not allowed to be called Order Block Breaker Trader. It was Breaker Trader. The original indicator, the market reversal alerts indicator, that was called the Order Block Breaker indicator. And the website was called Breaker Trader. But Mr. Huddleston said, you can't use that, it's my copyright. So I said, where's your copyright notice? You can't use that, it's my copyright. Where's your copyright notice? Oh, you haven't got one because you can't copyright the word breaker because it's got nothing to do with trading. Oh, and you can't copyright market structure because you didn't invent it. Piss off. But I changed the name anyway because I couldn't be asked to argue. The guy is an absolute lunatic and you just need to stay away from him. I had the indicator name back in mind, yeah. Yeah, basically he's like all psychotic people. When they get a bee in their bonnet, they can't drop it. So it's easier just to go, yeah, okay, and just change. You know, this is the thing, like I said, I've done videos on it before. Everything in the world is recycled. Nothing I'm showing you here is mine. Yeah, I did not invent market structure. I did not invent propulsion moves. The market did. The market changes direction. It goes up and down. When it changes from being bearish to bullish, we call it a break in structure. Market structure has broken to the upside. Nobody's got copyright on that. I didn't invent it. It's been doing it for centuries. Propulsion candles are large moves in the market caused by bank and institutional orders. If you draw a block on it, it's a propulsion candle. If you call it a fair value gap, a wide range bar, or whatever you want, I didn't invent it. I call it a propulsion candle because I was taught that big moves were called impulse moves or propulsion moves. I could have called it an impulse candle. But it doesn't matter. I didn't invent it. It's been there forever. Lots of people have traded it over decades. But if I had have called it the propulsion candle indicator, and then someone else decided to call their entire course the propulsion candle indicator, I'd probably be a bit hacked off as well. So I get where he's coming from, ICT, but at the end of the day, it's not yours. It's everyone's. Yeah. So that's why the name changed, because I couldn't be asked to fight, basically. But he hasn't got a copyright on anything. But don't forget, he invented the algorithm that controls the entire market. Remember? IPDA, the Interbank Price Delivery Algorithm, was invented by Mike Huddleston. Why is he not a multi-billionaire? Why is he not Elon Musk if he controls everything, that the entire world economics and fundamentals, the way that every bank and institution on the planet makes money? How did he manage to invent that and not come out of it with a penny? I don't know. Call me old-fashioned, but if I'd have invented that, I'd be a billionaire. Anyway, so there we go. Right. I'm just going to cover this DAC. I'm up to 37. So I'm just going to make sure I keep that in the bank today. So nice, successful trades in both indices this morning. That's really all I've got for you today. So I'm going to get that set up this week. I'm going to get the account. Well, the account's all set up and ready to go. I've got the EA running. Well, I've got the EA set up. I haven't got the account launched on the VPS. That's all. So I just need to roll that out onto the VPS today. And then not today, tomorrow, this week sometime. And then, yeah, it's just a case of I'm going to put the position trader on the air as I have it here. I'm probably, for the moment, going to set it up pretty much as it is here, with a really wide scaling distance. And yeah, use pretty much exactly what I've described to you this morning. So it's a case of just eyeballing stuff, really. So going through the charts every day and going, not on that time frame, but on this time frame, going, okay, I quite like the look of that. If it pushes up above there, I will go long. Yeah. So just hit the buy button, which is the absolute opposite to mean reversion trading. But I'm not mean reversion trading. I'm position trading. Mean reversion trading is typically the way that I get into positions. But right now, breakouts are just as good to get into as pullbacks. And I'd rather stay in line with what the trends are at the minute. Aussie dollar Swiss is coming down because they're buying the crap out the Swiss franc. If he continues to do what he's going to do, they're going to continue to buy the crap out the Swiss franc. However, if the Swiss drop their interest rates to zero and Trump drops the trade war, it's going to be up there. Yeah, but unless you've got that crystal ball, you don't know which way to trade at the moment. Neither do I. So my entire being is saying that propulsion gap's all going to get filled. But right now, I'm not sure. So best thing you can do is, if you are thinking propulsion gap fill, press the long button. If you're thinking, don't think that's going to get filled and it's going to continue this way, press the short button. But plan your distances according to that, not ADR. Yeah. So calculate your own ADRs, basically. Measure it. Press the middle mouse wheel. Measure that. 217 divided by 4 is 50. ADR is 105. There you go. So I will take half an ADR on this particular instrument, because that is the trade that I am thinking will happen if I'm wrong on that short. Yeah, but it's not going to be the same ADR on everything. So, that half an ADR, I look at something else and I go, I don't want to scale in more than less than one ADR apart. So it's all going to be very dynamic. That's all I'm going to do. So all you can do at the minute. So I'll publish a list of the instruments I'm going to trade. It's pretty much the same as it was before. And swaps as well. At the minute, some people have been saying they're getting some very odd swap. And I have to say, I haven't seen anything really crazy with swaps. I mean, they're all pretty much the same as I remember them being, previous. So I think at the moment, a $10 swap is probably acceptable, and I'll probably stick with that. So if there's instruments out there where the swap is above $10, I'm going to leave it be. It's mainly going to be the yens and the Swiss at the minute. So the Swiss and the yen are really the things that you're going to get those big swaps on. Everything else, I think, is fair game. I've not noticed any massive, huge numbers coming in on swaps. DarwinX, I'm seeing slightly better numbers, but Euro New Zealand, there's a good example. Look, swap long on Euro New Zealand is 15. Don't want to hit the long button on that. I don't really want to anyway, but we've got some fairly big swaps on the euro pairs at the moment. Pound CAD 11s, they are going up, aren't they? Pound CAD 1160. So there are some fairly big size swaps coming in. 1890 on the pound Swiss. Wow. I see what people mean. I haven't been paying any attention to it because I haven't been running the position trader account, but they are actually getting quite big. So again, need to just take that into account. Assume that move there that took 2 weeks, assume you're going to be 2 weeks in the opposite direction. Whatever you see on the chart, assume the same is going to happen again. Or if we want to be a worst case scenario, let's double it. So assume you're going to be in it for 4 weeks. Are you happy to hold a $560 swap for 4 weeks? I am, not a problem. If it was 15, no, I don't want to. Be careful with DarwinX swaps. These are 3 times higher today because it's Wednesday, and tomorrow they will show a 0. Yeah, so again, this isn't something I don't trade with DarwinX swing. So I have never paid any attention to their swaps at all. But obviously Wednesday is double swap day. So swaps happen on Wednesdays. So yeah, I mean, if the way that they decide to calculate their swaps is they charge you on the Wednesday, I mean, there's nothing you can do about it. It's a cost of doing business, but maybe I would say don't use DarwinX. I mean, you can't position trade with DarwinX anyway because they don't give you enough leverage. They only give you 30 to 1. So you can't actually position trade with DarwinX. You can position trade with Global Prime or Robo Forex. But DarwinX is intraday. I only trade DarwinX on indices. So they're the only broker showing it that way. Yeah. I don't know. Never come across it. So it's one of those things you just, if that is the case and you don't like it, don't trade with them. Use a different broker. Use Axie or Robo or Global. There's plenty of other brokers out there. This is the thing with brokers. I'm going to do a session on it because I've done a session on brokers before, but they are all very different. You know, different. They're like insurance companies. You can get cheap swaps, cheap spreads, but there's always a problem down the line. Yeah, you get cheap insurance, but when you come to claim on your insurance, they go, "There's a £5,000 excess," and you go, "What? Oh, no wonder my insurance was like 10 times cheaper than everyone else's." They sting you if you claim. Then you got insurance companies that cost twice as much as everyone else. You go to claim, they go, "Would you like a free car for 6 weeks while we're fixing yours? Oh, and here's a box of chocolates, and no problem. We'll just pay the claim out for you now. Don't worry about it. We'll sort everything." You're paying for that. Yeah, brokers are the same. Some of them have got great swaps. Some of them have got terrible swaps. Someone like DarwinX is going to change it on a Wednesday, and they're going to do something completely different on the other days. Some are tight spreads. Some are big spreads. Some charge big commissions. Some don't charge any commissions. Some charge both. Some spread like crazy around news. Some don't. You just have to try them. Yeah, I hate changing brokers because it is an experiment. It's almost, and again, you stick. I've got an experiment running at the moment on the breakout strategy where I've got it running on Global Prime and I've got it running on DarwinX. Sorry, no, I've got it running on Robo Forex and I've got it running on DarwinX. Yeah. Yesterday, the Robo Forex account was up. The DarwinX account was down. Same strategy, same indices, same time frame, same EA. One of them made a profit, one of them made a loss. It's the same thing. But for some reason, the spreads were slightly different. The distances were slightly different. The difference between those things made a profit and a loss on one account and another, doing the same thing on the same day with the same instruments. Yeah. So you just have to try things out. DarwinX has different open times to Robo. So you'll do a back test on an instrument, and because there's different data, you'll have different indicator values. So where there's an RSI extension on RoboForex, DarwinX won't have it, because DarwinX is missing 3 hours worth of data on the DAX that you did get on RoboForex. Completely different results, because indicators are based on data. Candlesticks. If those candlesticks don't appear, that data is not drawn. You're going to get completely different readings. So you've got to take all this into account, yeah? Which is why I always say to everybody, don't go on my back testing. My back testing is my back testing. It's matched to my broker. Use yours. And if the settings that I give don't work, do a robustness test. Find the settings that do work with your broker, and assume that your broker is going to do the same thing moving forward. As long as they do, be all right. If your broker suddenly decides to change the opening time of the DAX, it's not going to work the same, is it? Because your indicators, your ADRs are going to be different. Your RSIs are going to be different. Your moving averages are going to be different. It's not an easy thing, which is why these higher time frames are where most people that make money are situated, because everything is slowed down. The accuracy of the indicators is less important. When you're on 1 minute time frames and 4 hour time frames, the 1 minute time frames, the difference between a candlestick being that big and being that big gives you a different moving average reading. On a 4 hour time frame, it's absorbed. On an hourly time frame, it's absorbed. You don't see these little inefficiencies and changes and differences in spread making any difference up here. But you do on low time frames. ORB, people have been saying, my ORB hasn't taken a trade in 2 days. Mine has. But that's me. Yeah, there's nothing wrong. It's just the conditions are different. You can adjust your conditions to make it trade, but do you want to make it trade, or do you want it to trade the edge? What is the edge? Changes all the time, doesn't it? That is why I cannot use the swap filter with DarwinX. I set long short only in the A settings. Yeah. So yeah, I mean, obviously that's why we have the long short. So and in MT5 I've got a long short entry on the inputs as well, because MT5 doesn't have that. But yeah, do that. It's trend filter. People keep asking me to, someone asked me the other day for a moving average of oscillator filter. Never heard of it. I don't know whether they meant a moving average or what, but people ask me all the time, can we have a moving average filter? You don't want a moving average filter in mean reversion, because it means you'll never take the mean reversion. By default, yeah, if you only want to trade in the direction of the trend, you can't mean revert it. It's a mean reversion strategy. So what they're saying is, I want to take these ones only. But what happens if market structure shifts? You're just trading in the wrong direction. It doesn't make any difference. I've proven it to myself over and over again. I've put MA filters on everything. Useless. In mean reversion. Trend trading, yes, obviously you want a mean trend filter, but MAs are as good as any. But moving averages are all going to be different on different brokers because of the way that data is done. Slight changes in price will make a big difference to data historically. Don't forget, with any indicator that's based over time, like this is the RSI 21. We're measuring the last 21 candles relative strength. If these candles are missing on your broker because they don't publish those, because their open and close times are 2 hours different, your relative strength is going to be different, because it will be gapping and different price action, which means the reading won't do that. It will do that. It will just jump to a different level. That happening over 3 days is going to give you a completely different moving average reading, for example. Yeah, so everything in trading is rough, which is why we position trade, which is why I position trade. Because if you're rough, you've got more chance of being right. If you've got to be pinpoint accurate with everything, you're going to get different results on different brokers. And that's never going to work, is it? Because it means if you change broker, you have to completely redo everything you've ever learned or ever tested, your entire strategy. Or you find another broker that's got the same data, but they're likely to do the same thing, which is probably why you left your broker in the first place, because they were rubbish. Anyway, partial taken on DAX. So partial profit target hit. Yeah, there we go. Nice day today. Up 800 on the day, which is good. Right, I'll leave it there. Anything you need, let me know. I'll be back this afternoon for the New York Open at 2:30. And we will see how the market goes this afternoon. Today's news-wise, obviously, we got PMIs all day today. So let's just see what these PMIs came out at this morning. So Germany was mixed as well. Europe mixed. So and UK mixed. So services is our main industry. So negative. Not negative, is it? See what I mean? The market's really not paying attention to this news, is it? So that was negative UK. We've had a spike and a retracement. No impact. Yeah. Fundamentals just not driving this at the minute. So we'll see what happens with the PMIs this afternoon. We'll be on for that at 2:45. But yeah, very little today. PMI day, one of the biggest days in the calendar for news. PMI is the precursor to CPI. CPI is the second most important number in trading. PMI, we've had 3 Euro PMIs this morning. Germany, France, and combined, nothing. Yeah, it's just they're just not interested in fundamentals right now. Market is moving on Trump and Trump alone. So we wait for him or his cronies to open their mouth. That's it. Whoever has been told to say something, they're the ones that are moving it. So again, range bound trades, brilliant at the minute. So just stay range bound until he says something. When he says something, that range trade is going to fail. So assume that the market's just going to flip flop up and down, holding until it's ready for him to say something. That's all you can do at the minute, isn't it? Right, so yeah, I'll update you on that when I've got everything set up on the position trader account. Yeah, and it's literally winging it at the minute. It's winging it with intuition and buttons. Most important thing, buttons. All right, so I'll see you this afternoon. If you need anything in the meantime, let me know. I'll be in Discord and Telegram. Ace, send me your question in Telegram, Discord, and I'll attempt to answer it if I haven't already. Yeah, and we'll see you next time. Have a good day.